What's up, guys? It's Rob here, and today we need to talk about some important economic events that could potentially be putting us deeper into recession in the near future. Now, if you guys have been invested in the market, you know that a ton of stocks, pretty much every stock, is down over the past 6 to 12 months. Everybody's losing a ton of money, and yet the government's actually denying that we're in a recession, all right? They've said that they've changed the criteria for what a recession actually is on a technical level, and that we're not in one. But a lot of people are sticking with the old definition that a recession is 2 quarters of GDP decline consecutively, and that's what dictates a recession. And, for a lot of people, that makes a lot of sense because when GDP has been going down for as long as it has and the market's been crashing, it certainly seems like we're in a recession. Now, there are a couple of things that could be affecting the market. A lot of people would like it to be affected to the upside because, as you can see, we're actually reaching new yearly lows. We're getting very, very close to where we were just a couple of months ago, potentially making new 52-week lows in the overall stock market, the S&P 500. And there are some things that could be either taking us higher or lower. The first is happening on Tuesday, September 27th. Fed Chair Powell is speaking then, all right? Everybody listens when Powell speaks because Powell is really driving where the market goes at the moment because he's the one who has a very large influence on interest rates, all right? And everybody's worried about interest rates because the higher interest rates go, the more difficult it becomes to act in our current economic environment. The more difficult it becomes to borrow money as a company, the more difficult it becomes to make the justification that you should be investing in stocks when you can get a return on your money just sitting in a safe investment account, collecting the interest the Fed is giving out. And overall, it's a very important time to be listening to what Powell's saying, all right? We'll break down what he says after he has this meeting, and we'll hopefully come away with some bullish things for the market, but it's not too likely. The past couple of times that Powell's talked, it's actually been very bearish, and it's made stocks go lower, all right? He has not been a friend to the market the past couple of times he spoke, and I wouldn't necessarily expect him to be a friend this time, especially with the new GDP numbers coming up. Now, currently, we're seeing those numbers come out on Thursday, September 29th, and we're forecast to have a decrease of 0.6%, all right? Just what we had in the previous quarter. And if we actually take a look at the GDP, you can see that we have been declining. And unfortunately, we've been declining in a way similar to what we saw in 2008 and 2009. That's the last time that we saw a significant decline like this. And unfortunately, a lot of people are thinking that due to this, we're in recession. And I am one of those people, right? It certainly looks to me like we're in a bit of a recession. We've seen stocks plummet. We've seen people lose their jobs. If you look at this, granted, most of that was due to the pandemic, but you did see lower employment than just a couple of years ago. And we're actually finally starting to get employment back under control, right? We're getting back to where we were before the pandemic actually hit. But you would have expected to see typically over time some employment growth over a period of about 2 years, whereas we're just almost exactly where we were 2 years ago, right before the pandemic, indicating that, there hasn't really been all that much economic growth. And you're finally starting to see that in the GDP numbers. They are declining. And a lot of that is due to the fact that there's no more stimulus being handed out, or at least no more direct stimulus checks handed out by the federal government. There are obviously state governments that are handing out stimulus checks to help combat inflation. But we are seeing, unfortunately, not great stuff in a broad economic sense. We're looking at a situation where GDP is declining. Jobs are worse than what a lot of people would like. A lot of people would like to see more employment than we saw 2 years ago, whereas we're maintaining a somewhat steady pace of it over the past 2 years. It's just basically remained flat. Interest rates are going up. The only bright side that we're actually looking at over the past couple of months is actually that oil has been on the decline. This is one of the brightest things that we're seeing for the economy, the fact that oil has, over the past several months, been getting cheaper and cheaper and cheaper. And we're actually getting somewhat close to 52-week lows on the price of oil. And oil is a very important factor when determining the overall inflation rate. You can see a breakdown of all the different categories, and oil and gas and energy were the only ones that were really helping us in this last CPI reading that we got, where we came out with 0.1% inflation for the month of August 2022. Oil and gas were the only things that were really dragging us down. Everything else was pretty positive. Used cars and trucks were also barely negative, down 0.1%, but there were other categories that were taking us up quite a bit. Food up 0.8%. We saw a bunch of things taking us up. Shelter up 0.7%. So a lot of categories were in the red. We saw big increases in those categories, and oil and gas were some of the few that were actually helping to maintain some balance by taking us down. And hopefully we'll continue to see that. It looks like we will, since the month of September has been cheaper than the month of August overall. It looks like we'll continue to see oil and gas help us out. But overall, it's a tenuous situation, right? If we lose oil and gas, if those start to go up in price, then overall we're looking at big inflation again, which is not what we want. We want these inflation numbers to be coming down so that the Fed can stop being so hawkish and stop raising interest rates. And we overall want the stock market to start moving back in a positive direction, which will probably not be happening until we really see inflation come down in a meaningful way. Now, it has decreased on an annualized basis over the past 2 quarters, or the past 2 months, actually, the past 2 CPI readings, but that's not that long. The Fed says they want to see sustained data proving that inflation is on the downturn before they start to change course. At the moment, they're pretty dead set on beating inflation, and they're going to continue raising rates to do so. So we're looking at a situation where we've got to get this number down one way or another, and the Fed isn't going to slow down, it looks like, until they start to see this come down in a meaningful way. And, that's very possibly what we're going to hear from Powell. He really wants to beat this thing. So tomorrow, watch out. Powell might be a real bear for the stock market, taking stuff down. And the GDP numbers could be bad. They could be bad. Hopefully, they won't take stocks down too much. But, what I think about this is that it really helps if you're invested in the stock market to be invested in something that you have a long-term belief in, because it's tough to maintain your conviction when day after day you see stock prices just plummeting. It's really tough if you just got into something expecting to make some short-term money to maintain your conviction and not just to sell out when it's red for a couple of days or weeks or even months in a row. If you actually are holding stocks that you believe in over the long term, then that can really help you stick with those stocks if you can see a path for them over the coming years or coming months or whatever your time frame is. If you can see and think of some reasons why they'd be going up, and if there are particularly reasons that you strongly believe in, then that really helps you maintain conviction and not end up just selling because you see that stocks are red over a shorter period of time. So that's just, not financial advice, just my opinion. If you guys appreciated this little update on where the economy's potentially headed over the next couple of days and weeks, then feel free to subscribe to the channel and feel free to join our community at the top link in the description. We've got a little locals community where we post stuff every day. So if you want to join that, feel free, hit the button down below. Other than that, guys, have a great rest of your day. I'll see you in the next one. Bye.